picks coming in from our chartists when it comes to the broader markets. Well, from the Lal Street to Mint Street, earlier today, what you did see was the rupee for the first time ever crossing 79 against the greenback currency. So that's exactly what we're going to be discussing, the reasons for the rupee depreciation, how low can it go? Is India placed better versus the other EMs, the headwinds, the tailwinds? All of that is what we're going to be discussing with our two guests, Alvin T, the head of Asia Forex Strategy at RBC Capital Markets. And we've also been joined by Bhaskar Panda, Senior Regional Head for Treasury Advisory at HDFC Bank. Good morning, gentlemen. Thanks so much for joining us right here on ET Now. Bhaskar Panda, I'll come to you first, sir. We've already seen 79 on our screens for the rupee versus the dollar. 80 is, of course, a psychologically crucial mark. Having said that, the RBI said it has no level in mind for the rupee. All it wants to prevent are wild swings and volatility. Sir, has there been activity from the RBI, some kind of intervention to prop up the rupee? Because right now it doesn't look like it, or would it have fallen further?
If you look back, the data that has been released by RBI, obviously there has been intervention because, it's almost like $17-18 billion, if I remember correctly. So it has been there. Their stated objective always is that to cut down on volatility. However, recently, rupee actually has been one of the worst performing currency vis-a-vis other Asian peers. And why that so? There could be various reasons. Everybody knows that our trade gap, our current account gap, capital inflows coming down, so on and so forth. Obviously, the oil is the joker in the pack, and that remains high, and our import bill goes higher and higher. Today, I saw a news item that government has raised tax on the gold imports from 7.5% to 12.5% to dampen the gold import demand, which is a large chunk in our, trade gap. Hopefully, that will add to, recovery in rupee. But for the time being, rupee is going to be under pressure. Any number you can put, 79.50 or 80 could be possible. But personally, I feel, 79.50 or 79.60 kind of will top out. And probably the government also is looking at, depreciation rupee along with RBI, and probably they might take some more measures to, take this to the right level, or maybe they will keep somewhere around the level we're in right today.
Okay, Bhaskar Panda, that's the word coming in. Interesting, take as far as where rupee is headed, and more importantly, how that import duty on gold could also impact that. Alvin Tan, hi, morning. Thank you so much for speaking with us. Wanted your take regarding what's happening with Indian rupee, and we were talking with with an Indian economist earlier, Mr. Swaminathan, who said that the right way perhaps to look at what's happening in the currency right now is not in isolation, but see it in context with what's happening to the rest of the emerging market and developing market currencies as well. And if you look at it with that lens, Indian currency has managed to outperform. Yes, we have slipped almost 6 to 7% this year, but the dollar index is up almost 10%, and other global currencies have seen a cut of as much as double digits. What would your take be?
No, that's absolutely right. The Indian rupee in a global emerging markets FX context has not done too bad. I agree with that. And indeed, the RBI has been actively in the market attempting to dampen the volatility. That said, if you just look at the rupee itself, I think that clearly, the path of least resistance is further weakness, especially against the dollar. And I would say, quite apart from the Indian external balance, which is deteriorating, there are several other factors at play, global factors. And number one is the US dollar, by and large, continues to gain ground, particularly against emerging market currencies. And more so if indeed we are entering into a global growth slowdown in the second half of this year. So one can expect the dollar, broadly speaking, and also against the rupee, will gain ground in a global growth slowdown scenario. The second point is that there has been tremendous foreign capital outflows out of the Indian equity market this year. The outflows are very large, and that is actually adding on top of the trade deficit. And it's just very difficult to see how these equity market outflows are going to turn around very quickly if indeed we are entering into a period of a global growth slowdown. Therefore, it's just very difficult for me to see how the upside pressure on dollar rupee, will stop anytime soon.
But what's your take regarding dollar index itself? Do you think that it is likely to continue in an uptrend? 104, 105 is where it is at currently. Do you see it heading towards 110, or maybe there is some sort of opportunity for it to slide a tad bit now?
Yes, I think that the dollar index can indeed go higher. It may not reach 110, but definitely it can go higher from here, which is just currently below 105. That's because we do expect euro-dollar, which after all is a very large portion of the dollar index. We expect euro-dollar to trade to parity before year end. So we do anticipate further upside to the dollar index, yes.
Bhaskar Panda, if I can now come to you. Just seeing, you have said there has been intervention that we have seen. What can be the jugalbandi between North Block, Finance Ministry, as well as Reserve Bank of India for reining in the rupee?
So the jugalbandi cannot be defined because the situation is dynamic, so it has to be dynamic. As I said right now, the tax increase in gold imports is a very right step in the right direction. So similarly, one has to see what can be done to curb imports without actually damaging the manufacturing capability or the imports for all other things. Imports for consumption of you can say that not very necessary items could be looked at, and something can be done there, but that's not a very large part as of now if you look at the data. So gold is a very large part. Oil obviously is a very large part which cannot be influenced. So I don't see right now, honestly, what else can be done to dampen the demand for imports. It's very difficult right now. You have to have growth, you have to have imports, you have to have you have to push your economy higher. So at that same time, you have to rein in a depreciating rupee. It's literally impossible to do everything. But I think today's increase in tax is a step in the right direction.